Building a commercial lending business that scales. And building a successful commercial lending business requires more than just finding the next borrower or closing the next transaction. And if your entire business depends on constantly hunting for individual deals, you may generate revenue, but you've not necessarily created a business that can scale. And sustainable growth comes from building a repeatable platform around relationships and lender access and deal flow and systems and specialization, all to improve your execution. And for commercial real estate professionals and mortgage brokers and referral partners and business owners, understanding how a scalable lending platform works can also make financing more efficient. And the objective is not simply to find capital, it's to create a process capable of matching borrowers and transactions with the appropriate financing solutions consistently. The difference between closing loans and building a lending business. Many commercial lending professionals begin the same way. They find a borrower, identify a lender, package the transaction, close the loan, and then start looking for another opportunity. And that approach can work, but it's difficult to scale. And a scalable commercial lending business turns those individual activities into repeatable systems. And your relationships become opportunities, and your opportunities become qualifications, and the qualifications become lender matching. And then you can prove your execution, closing, follow-up, and more referrals. And when each stage is documented and repeatable, the business becomes less dependable on improvisation. And that distinction matters. The goal is not simply to work more deals. The goal is to develop an infrastructure that allows you to handle more opportunities without creating proportional increases in your workload. So build a reliable commercial real estate referral network. And commercial lending is fundamentally a relationship business. And a strong referral network may include commercial real estate brokers and residential mortgage professionals and CPAs and attorneys and financial advisors and business brokers and insurance professionals and developers and property managers, but also investors and business owners. And the strongest referral relationships are rarely created by repeatedly asking somebody to send me deals. Instead, become useful and help commercial brokers determine whether prospective buyers can actually obtain financing, and help business brokers understand whether an acquisition could qualify for SBA financing, and help investors compare leverage and debt service coverage requirements and amortization and recourse and prepayment provisions and other structural considerations. And when referral partners see you as a financing resource rather than simply another salesperson, relationships can become a recurring source of opportunity. Two, just stop trying to memorize every commercial loan program. And commercial lending is so fragmented. And depending on the borrower and the transaction, financing could potentially come from a bank or a credit union or an SBA lender or a USDA lender or an agency lender or a CMBS lender or a debt fund or a bridge lender or a life insurance company or a private lender or a specialty finance company. And no commercial lending professional can realistically maintain detailed knowledge of every lender's constantly evolving and changing credit box. Scalability therefore requires something more valuable than just simply memorizing it. My point is, that's a reliable lender matching process. And technology in commercial lending marketplaces can help professionals evaluate multiple lending sources more efficiently, while human expertise remains critical for interpreting the transaction and structuring the financing strategy. Three is qualify opportunities before spending hours working on them. And one of the biggest barriers to scale is spending an excessive amount of time on transactions that were really never financeable in the first place. So we can help you create a disciplined preliminary qualification process. And before approaching lenders, understand key factors like the property. So what's the asset type and the location and the occupancy and its condition? What's the value and the operating history look like? The borrower. So what is the sponsor's liquidity and net worth and credit profile and the experience in that asset? And what's the ownership structure going to look like? But also the economics. So the NOI, the debt coverage, the leverage, the value, any existing debt, how the proceeds are going to be used, and the cash flow. But also the business plan. If this is an acquisition or a refinance or a cash out or a construction or an owner occupied transaction or a value add strategy or stabilization play. Also the exit strategy, and especially with bridge and transitional financing, lenders want to understand how they're going to get repaid. And a strong qualification process protects your most valuable resource, your time. 4 is build a repeatable loan packaging system. And good commercial lending opportunities can become difficult transactions when information is incomplete or poorly organized. And your loan package should tell a clear financial story. And depending on the transaction, lenders may need an executive loan summary with borrower information and personal financial statements, and a schedule of real estate owned, but also property operating statements and a rent roll and a purchase contract and organizational documents and tax returns and business financial statements and a construction budget and a sources and uses statement, a sponsor resume, property photos, an offering memorandum, and maybe a previous appraisal if you got it. So develop a standardized documentation request list and transaction summaries. And instead of rebuilding your process for every loan, you can have templates created that can quickly be adapted. And consistency improves both speed and lender communication. You need to specialize without becoming too narrow. And specialization can accelerate commercial lending growth because it makes your value proposition easier for someone to understand. So, for example, a professional might develop expertise around multifamily financing or owner-occupied commercial real estate and SBA lending, or maybe self-storage or hospitality or manufactured housing or industrial properties or retail properties or commercial bridge loans. And specialization helps you understand recurring underwriting issues and develop stronger lender relationships within a given specific segment. But specialization does not necessarily mean turning away every transaction that's outside of your niche. A strong platform can combine specialized expertise with broad lender access. So use technology to create operating leverage. And technology really should eliminate repetitive administrative work and not eliminate the advisor. In a scalable commercial lending operation, can use technology for, say, a CRM management and borrower intake and document collection and pipeline management and automated follow-up, but also lender research and loan comparisons and marketing and referral tracking and managing your database. And that purpose is operating leverage. And if technology saves you 30 minutes on a repetitive activity that you perform 20 minutes each week, that creates 10 additional hours of productive capacity for you. And those hours can be redirected towards borrowers and referral relationships and structuring transactions and generating new business opportunities. So build a recurring business instead of constantly starting over. And a closed commercial loan should not represent the end of a relationship. It should become the stepping stone in the beginning of the next opportunity. And commercial real estate borrowers frequently have continuing financing needs. So they're going to look at additional acquisitions and refinancing, and they'll have loans that are maturing, and they may be considering construction financing or expansion capital or equipment financing or partner buyouts or cash out refinances or just restructuring their portfolio. So remember to track loan maturities and stay in contact with your borrowers. And a database containing hundreds of completed transactions and professional relationships can eventually become considerably more valuable than constantly prospecting to strangers. 8 is create multiple sources of deal flow. And a scalable commercial lending business should avoid depending entirely on one lead source. So you need to build multiple channels, and that includes working with referral partners and other commercial brokers and CPAs and attorneys and bankers and mortgage professionals and business brokers. Your existing clients, you need to stay connected after closing. Educational content, so blogs, YouTube videos, newsletters, social media, webinars, and market commentary. But also networking, local business groups, commercial real estate organizations, industry associations, and professional communities. Strategic partnerships. Build relationships with professionals serving the same clients, but offering complementary services. And the stronger your ecosystem becomes, the less dependent the business is on cold prospecting. And you can become an advisor and not a rate shopper. And commercial borrowers frequently begin with one question: so, what's the rate today? But rate really is only one component of a commercial loan structure. And borrowers should also evaluate the loan to value and debt coverage ratio requirements, and the amortization and the loan term, whether it's with or without recourse, prepayment penalties, fees, any reserves required, loan covenants, closing timeline, and the future flexibility to refinance. And a lower interest rate with a poor structure may be less attractive than a slightly higher rate with terms that are better aligned with your investment strategy. And therefore, the scalable advisor just doesn't only quote rates, and the advisor helps borrowers understand their capital structure and build the business around a repeatable process. And ultimately, scalability comes from process. And a commercial lending business should be able to move opportunities through a consistent workflow. So you generate a lead, you qualify it, you package it, you match it, you compare it, and you execute. Then you close it, and then you follow up for the next one. And every time the process improves, then capacity increases. And every unnecessary step that can be eliminated along the way creates operating leverage for you. And every strong lender relationship increases your financing options. And every satisfied borrower or referral partner can become another source of future business. So how the CommLoan Empower program fits into that exact model. And commercial lending professionals do not necessarily need to build lender infrastructure entirely on their own. My name's Bill Rapp. I'm with the CommLoan Empower program, and it's designed around helping professionals expand their commercial lending capabilities by combining technology and lender access and education and deal support, and also a repeatable process. And the objective is straightforward. We build relationships, we create systems, we develop expertise, we close transactions, and then we repeat. And that is how commercial lending can evolve from chasing individual transactions into building a scalable business. So, final thoughts. The commercial lending professionals who create durable businesses will not necessarily be the people who work the longest hours. And they will be the professionals who build the strongest systems. And they develop referral relationships. And they qualify their opportunities early. And they standardize their loan packaging. And they build lender access. And they use technology intelligently. And they stay connected with previous borrowers. And they create recurring sources of deal flow. And the result is a more than a pipeline of commercial loans. It's a commercial lending business that's built to scale. My name is Bill Rapp. I'm a CCIM with the CommLoan Empower program, and I help with commercial real estate financing. And that's it for the day. Hope you have a good week. You can visit my website to learn more, billrapp.comloan.com. Thank you for your time. Have a good day.